Hello friends and welcome to my YouTube channel Simply Stocks, and today I'm going to talk about some of the new age tech stocks which have done well recently but have been slagging now because of higher valuations. So how do they stack up and how are they performing? So let's understand that. Let's get started. First of all, a disclaimer that this is not a stock recommendation, and people taking any position to any share that I talk about should do that with their own due diligence and research, and I'm not in favor or against any company that I talk about. Before I talk about these five stocks, here's a small request that kindly support me on Patreon, and once you do that, it will help me grow the channel, help you also ask me questions and ink out answers in greater detail. Once you get the $10 membership, you'll have access to my portfolio, my watch list, and a number of podcasts that I put up from time to time. Also, if you pay $100 upfront, you get 1 year access by paying for 10 months. So that's a 16% discount. For detailed market or company talk, you can directly email me and we can work things out with a fee. And also, if you cannot pay on Patreon, you can join the YouTube membership that's available by paying from any method. Now about this sector was virtually non-existent few years back, but came in prominence as demand and numbers improved sharply in some of the stocks. So these are not quite the stocks like Nykaa, Zomato that you might be thinking I'm talking about. These are the new age technology stocks or different technology stocks which are into mobile technology, into you can say precisions and army, etc. That provide, you can say, technology to army or the navy, etc. So comprises of top class firms in their own respect, still a niche space with high margins. It has run up a lot over the last few years, over the last at least 18 months. So some have been recent listings, but some have been running up for the last 2 3 years. So let's analyze each one of them. First is Root Mobile, a leading mobile tech and cloud company. It has acquired the top brands in cloud space across the framework and into revenue from messaging, corporate messaging, identity and verification, voice and email, etc. So they are into very interesting niche spaces where the margins are pretty good. There is strong DII and FII holding and promoter holding. There's only 14-15% free float, but there have been selling in this stock over the past month or so. So that data might be out after March, and we'll know as to whether FIIs have sold into it or not. Profits have doubled year on year if you look at FY21 numbers versus FY20, and currently it is at attractive levels from a long term point of view because it has fallen something like 25% from the top, so looks very attractive at these levels. The second in this list is MTAR Tech, one of the companies that is not talked about that much but has done exceptionally well after the listing. It is an interesting defense play. So this is not a defense stock or getting any orders with defense, arms, ammunitions, etc. or tanks, but they provide missile and defense technology expertise to the army. So it is in a space where you can say there's a huge barrier to entry, and there is where it really commands a monopoly kind of a business. It's a one of a kind listed company and in a segment which has high barrier to entry. As I explained, high barrier to entry. The market cap of the company was 7,200 crores when I made the presentation. It has gone down from there. Valuations are still stretched even after the fall. Valuations look stretched, but this is a good buy at current levels, and a buy whenever market falls again, say in 2 3 months time, or in this year you see market falling big time and the stock is down 10-15% from recent highs. You can accumulate the stock, and remember these stocks are long term good picks for 3 to 5 years, not something that you can trade on. The third in the list is AFFLE India. Looks very interesting. They provide mobile advertising solutions, and it got listed 3 4 years back and has been performing extremely well. It is a leader in this mobile advertising space. exceptional profit margins and growth that it has seen, and that's why the stock is trading at such a valuation. So it is trading at 100 times, 80, 90 times earnings. Prospects are very bright for the demand to surge, because as we understand that most of the people now watch, you can say, television, no longer watch television, and they are more glued to their mobile phones or tablets or laptops, and this is where FL comes in with their mobile technology and advertising and everything. So valuations are stretched, but I think growth may just continue for the next 5 7 years. Work from home has increased the need further, and with the IT space still working from home, and it looks like it would be a semi-permanent solution that people work from home. They are really cutting down on their costs. So it looks like FL will continue to perform well. Stock has run up again. It's a buy on decline. It ran up to 1500, now around 1200. Looks very decent to buy between 1200 to 1080. I think those will be good levels to get into. And next in my list is Map My India. Again, weak quarter this time around. Yes, I agree with it, but it is a fairly recent listing. Has quite a large market share in the industry. In fact, it has around 75 to 80% of the market, and in the organized space, it is the leader. There is unorganized sector in here, plus there is one large international player that works. So it is having its own niche in the corporate domain, provides location solutions to a number of industries. So you look at Zomato, you look at Swiggy, you look at a lot of online businesses. It is Map My India that is providing all the solutions. So it's a buy on any major declines, and this is the decline probably that you people would have been waiting for if somebody wants to buy into it. Around 7,000 crores or 6,000 crore market cap looks good. The sales to market cap ratio looks very weird at the moment, but numbers are set to only grow going forward. Yes, this quarter wasn't that great, but things will get back on track in a quarter or two, and any declines of this proportion is a very good buying opportunity. Very strong long term play, as online businesses will only thrive. Another business that is for this decade, I suppose. And the last in my list is Info Edge, and I would say that whatever fall has taken place, there is a rumor. There is no, you can say, there is no concrete news about it, but rumor that an FII have sold into some of the stocks of Jubilant Foodworks, Info Edge, etc. And they've done that to curtail their losses that were there in Evergrande in China. So that is what has happened. Probably we'll come to know probably by April when the shareholding pattern comes around. So the best of the lot in the online space, in the new tech space, owns a number of businesses. Sales and profit growth, we have seen it was in losses 4 5 years back. It has come back into profitability and doing extremely good. High pedigree stock, very good management, and these are very attractive levels around 43 4400 to buy into the stock. Very strong long term supports in here. Probably at most you'll see another 10% downtake, and some of its businesses like Naukri should do well as economy picks up. So very good pick at these levels. Info Edge. So this was a video on the new age tech space, some of the stocks that you could buy into. Please like and subscribe my channel, hit the bell icon so you can get my videos straight away when I post it, and kindly support me on Patreon. Thanks a lot for watching.